everybody, and we're live. Welcome to Behind the Markets. It's the Enterprise Thursday edition of Behind the Markets, where we go through entrepreneurship and we'll go through some of the data that is actually on the market. My name is Munyumba Mutwale. I will be eventually joined by my lovely co-host Stephanie. We'll be seeing when she can actually join us. She'll give me a signal. But for now, we're going to get started as we go through Enterprise Thursday before we close down the week. Let's go into some of the data for today. Welcome. Give us a shout if you are here and you know that this is a show that you would like to share with a friend. Please give us a comment, give us a call, and notify a friend. Tell your mother, tell your brother, tell everybody who you know, who you think needs business information. Today, they'll be talking about getting to product market fit and why it's important to find a product that fits the market's needs as we go forward. So let's get into our Enterprise Thursday conversation today as we get started. Getting into our Enterprise Thursday, here is the actual market roundup. We did see that the Kwacha continued its weakening slide down to 0.41%. And we did see that the dollar was trading up by 1.7%, up 3.34%, and up 17.66% year to date. We did see the stock market index stay flat yesterday, while up still 27.49%, while bond market rose up by 0.06%, but dropped in dollars by 0.25% and up in interest rates. What we also did see is that the rand went up by 1.04%, up back to about 1.109, up 3.68% year to date, up 3.91% on the month, and up 1.81%. So that's a little bit of pressure coming on in imported goods, especially cross-border importers who shall actually be facing some troubles on the way, some troubles in terms of costs and volatility. Looking at the bond market, we do see that the bond market is up 0.06%, up 21.54% year to date, while in dollars down 0.25% and up 3.87% year to date. And we also did see that GRZ bonds up 0.007%, up 0.85% year to date. Commodities market, we did see that copper dropped below 8,000 for the first time in 4 months. We'll be covering that story. Down 5.22% year to date. Oil dropped 5.5%. We'll also be covering what caused that yesterday with a nosedive, and that's good news for us. A little bit of light at the end of the tunnel, only up 0.07% year to date, while our gold dropped 0.01% yesterday and up only 0.73% year to date in dollars. Early predictions of what we're looking at the pump price. We might see the pump price come down. This is what early predictions. These are very, very early predictions as to where the direction of the market is going. We are seeing that the oil price is moving in a downward trajectory in terms of the projected end of month oil price. Sorry about that. That's some of the wrong months that we're showing here. But the projected end of month oil prices are showing that we'll probably see about 29.61, 0.37, or 1.25% decline in oil prices probably towards the end of this month. Wealth insurance assets also showing us that we did see that Bitcoin was up 0.8% in Kwacha, while Ethereum was down 0.8% in Kwacha. We also saw that gold pushed up yesterday by 0.04%. In Kwacha, showing that was just mainly the movement in the actual Kwacha itself, while Bitcoin actually did move positively. Cross assets yesterday, we did see that 21.5% upwards in bonds year to date. Stocks up 27.5%, still the leading asset. USD up 17.7%, gold up 18.5%. This is what we call cautious optimism, with Bitcoin up 94.4% and Ethereum up 60.4%. Now, if you take a look at where we are in terms of wealth, in terms of where we are to the quarter, remember that we've moved up in the quarter to date. Bonds up 0.2%, stocks up 0.4%. Dollars up 1.2%, and gold is down 0.1%, with Bitcoin up 3.2% and Ethereum down 0.7% on the quarter, versus the dark blue lines, which actually represent what we see towards the end of the month. Now, simultaneously, other news that we are also picking up. Other news that we are also picking up is in our four horsemen. We did see that PPIs in Europe dropped again by 11.5% year on year for this month, showing that inflation pressure is starting to come down, while crude oil inventories dropped yesterday. Crude oil did see a build, but we did see gasoline inventories push down the price. Now, we also saw two-year Treasury gilts in the UK come down from 5.27%, while 30-year mortgages in America have continued to rise to 7.5%. Italian GDP slowed down by 0.2%. European retail sales slowed down by 2.1%. And ADP farm payroll did come out, but we did see 89,000 jobs being created versus 180,000 jobs, meaning the job market in America is also starting to slow down and lose its momentum. That's also going to affect one of the stories. MBA mortgages also saw that mortgage applications are down 6%. Factory orders have slowed up 1.2% in America. So very weak growth data, had good tailwinds coming in inflation, but unfortunately, we're also seeing that interest rates are still mixed. Whether it's on the reflective market. Now, let's take a look at some of the news that came out yesterday. Barrick announced that it's investing almost $2 billion in the increase in Lumwana production to an estimated 240,000 metric tons a year. The project is to accelerate the project's accelerated work program is targeted at completing the full feasibility study by 2024 and bringing the expanded processing plant forward to 2028. Last year, Barrick launched the Business Accelerator Program also in order to build capacity of Zambian contractors. Remember, there's a lot of pressure now to actually now start working with domestic supply chain and also help support them so that Zambian contractors can actually play a stronger role in the market. Barrick also plans to double its production globally to 450,000 metric tons by 2031. So this is one of the biggest investments that they're going to be doing, $2 billion into Lumwana over the period of time. DRC and Zambia also launched their $850 million highway to the Indian Ocean. There's a bridge that's supposed to be connecting the two countries over the Luapula River, 345 meter bridge, which is going to be $850 million connecting over the Luapula River to obviously help us connect more to the Indian Ocean as well. Remember, as we're getting the Lobito corridor worked out, we also want easier access to some of our copper instead of it probably having to go south and then out. We probably will have some easier access if we can go through East Africa, especially now with DRC connected to East Africa. So at least we'll be looking at two channels that we can try and move some of our minerals out, especially for export purposes. So President Tshisekedi and President Hichilema broke ground earlier this week on the 345 meter bridge that will be erected across the river. Oil dropped by 6% in the biggest loss in the year as gasoline stocks build up. Obviously, hijacked the OPEC show. Concerns about the health of the global economy, particularly Europe's vulnerable versus the relatively resilient American economy. But there are two questions. The European manufacturing sector seems to have contracted, while the American job market seems to be slowing down. U.S. crude draw and the buildup in Cushing staggered, obviously, versus the 6.41 million barrel buildup of gasoline stockpiles. So this is what also caused an issue in terms of the oil prices. And finally, in the final piece of news, which we may have not paid attention to, is that copper is down to a 4-month low. Things that are dragging it down, Chinese manufacturing has become dismal, while simultaneously we're also looking at not just Chinese manufacturing, European manufacturing sector has also contracted. American job market has also slowed down, and the Saudis announced that they'll probably bring an end to their production cuts by the end of this year. And at that point, we're actually seeing oil trading at a far lower click than what we expected. And that was some of the major news stories out there. Barrick $2 billion into the copper mining sector. Oil down by 6%, and therefore we're seeing that pump prices may actually come down this month if we continue down this trend, and also if we can hold back any FX losses, because we are starting to get to that point where we should start seeing some reversing in the FX rate, because there has been sideways trading between 20 and 21. So FX losses are also are one of the main risks, but still we are seeing that downward pressure in the global crude price is actually adding to that. But however, the pump price also may experience a problem because transportation costs of higher diesel prices might also cause a slight problem. So that is part of the major story clicking in today. Now, let's get into our big topic of discussion today, and that is our series on climbing the business ladder, moving from an idea to an icon. And this is our picture of the business ladder, something that we should actually be looking at. The business ladder is a visual that we have painted for you about how to climb up. And remember, and it talks about what are the different focuses at different stages. As an entrepreneur myself, I've always tried to figure out what is the roadmap I should be following. And therefore, the first step is solving a problem. Remember, underneath all of this is another task, which is finding your market, finding a problem, solving a problem, and building a starting team. That is what we call the 0 point. That is the actual starting point of building your business ladder. And that's what we call the soul searching stage, where you're trying to figure yourself out. But once you've done that, remember what we said, the first thing is building a minimum viable product, learning to be in compliance with your market. In other words, building something that is in compliance with your market, basic compliance, not optimal compliance, just making sure you're not breaking any laws, making sales and creating cash flow. Okay, not cash flow. In other words, how do you get people to come back to you regularly? So the big question now, once you transition to making a sale and cash flow, you are trying to make sure that you establish product market fit. And that has been the conversation that we've had. That's stage 1B. We talked about operational efficiency, but before you do that, you must establish product market fit so that you can optimize your business and then create a business model around a product that fits and an optimized business process. So that is what you need to do. So one, you need to create a product that sells. Then you need to create a product that fits. And by the way, this is what affects a lot of people from getting their adequate financing and everything. People say, well, why is access to capital so difficult in this country? Perhaps we also need to ask ourselves, are we solving problems for our people, or are we just trying to get rich and not figuring out that you actually have to solve problems in order to actually build wealth? It's not an either or, it's actually the way it works. So you actually have to solve a human problem so that human can feel comfortable parting with money from their pocket to give you, so that you can actually build your wealth using that money that they've given you by paying down your costs and having a profit for it. So really the breakdown is, are we creating, is the breakdown may not be, is capital easy to access? The question is, are we solving problems with enterprises, or are we just trying to find a way to extract money from people's pockets and not caring whether we're actually solving a problem, and therefore our people are opting to go for foreign goods as opposed to local goods? Those are questions. And that's a question I want to throw to as many of you as possible in the comments today. For all of you who are watching, do you think, do Zambian businesses solve Zambian problems? Okay, do Zambian businesses solve Zambian people's problems? And I want to really just share that out with as many of you as possible and get your views from there. Do Zambian businesses solve Zambian people's problems? Because that's the core of any business. Remember what I always say, a business is a problem solved by a product built with a process served by people. Okay, that's a very simple way to define your business. It's a problem solved by a product built with a process served by people. And that shows you the components that you need to know. You need to go from a problem to a product to processes to people. And that's the best way to try and look at it. So let's get into the rest of the business. Let's get into the rest of the conversation about product market fit and where we actually stand with that. So we started last week with product market fit. This was building product market fit. We asked the question, what is product market fit? We gave various definitions and where did it come from? Remember, it was developed by Benchmark Capital founder Andy Ratcliffe and Sequoia Capital founder Don Valentine in the mid-90s, but popularized by venture capitalist Marc Andreessen. And he basically says the degree to which a problem satisfies strong demand, a unique product offering that people desperately want, or when a product's target customers are buying, using, and telling others about a product in numbers that are large, in numbers large enough to sustain that the product's growth and profitability. Okay, so it's the first step to a successful business. It's what connects the product to the market. Okay, that's what we call product market fit. When the value that the product is offering meets the underserved needs of the market and takes off into exponential growth. That's what we're talking about. We talk about the fact that there's two levels of product market fit discovery, product market fit refinement. That when you come up with an idea, a prototype, and a launch, you're discovering your product market fit. And when you are going from there, you're building traction, monetizing, and growing. You're refining how well your product fits the needs of the market. Does the value your product is offering meet the underserved needs of your customer base? okay, of a growing and profitable customer base. There is no business, there is no company, there are no offices, there's no board of directors or anything of the show if you do not have a product that meets an underserved needs of a profitable customer base. Please, somebody write that one down, because that is extremely, extremely, extremely important. There is no business if there is no product that meets, that delivers, sorry, there is no business if there is no product that delivers value that meets the underserved needs of the customer. And I'll say it one more time. There is no business if there is no product that delivers value that meets the needs of the underserved business of the customers. And we do have an answer to our question there. Mr. Stokey M has written, yes, Zambian businesses do solve problems. However, the cost of production in our environment doesn't paint a particularly positive picture on the business plan. An import-based plan is more competitive, and therefore, yes. And at the end of the day, brother, that's why we all need to try and innovate our way through it. It's a tough one, and I'll say this to everybody: it's not easy to solve a problem using what is around you and what is in your hand. It's not easy, and it's not easy to sell a higher costing product but still manage to get it through. And don't be fooled, people. The Zambian customer can still buy higher costing products. They do that all the time with foreign goods. It's just about maybe the way we sell it. So that's some of the stuff we need to look at. But that's a good answer. And thank you very much, sir, for giving us your feedback on that. And please, people, continue giving us your feedback. We also talked about the various interpretations of product market fit, saying various interpretations of it, saying that it's creating a minimum viable product that addresses and solves problems that exist or needs that exist. It's the step between customer validation and customer creation. So validating that there is an actual customer and creating a customer that returns is about finding product market fit. This is from Steve Blank's book, The 4 Steps to Epitome. According to Alexander Ostenwalder of Business Model Canvas, product market fit comprises of value proposition, customer segments, relationships, and channels not having to be set. The hardest things to do, the 4 list of the hardest things to do, we found that product market fit was the number 1 hardest thing to do. Second to that was building a world-class team. A distant third was making money, because once you've built a product that fits the market and built a team that can deliver it, making money kind of just comes fluently. So if you focus, if you instead of focusing on making money, and you focused on finding a product that fits the market, or making sure your product fits the market's needs, and also building a world-class team, you probably find that making money becomes much easier. Why is product market fit important? Because bankers, financiers, and especially venture capitalists want evidence before they actually consider giving you money, that you've actually got a growing market. Before you can develop a product, that you can confirm people are willing to buy, you cannot afford to build a team, meet other strategic objectives, grow your business, upsell other things. It also determines that your product has enough of a market to sustain itself. You can't grow your business past 20 to 25 people without a product that fits the market. And markets matter. Neither a stellar team nor a fantastic product can overpower a bad market. So now let's talk about how to actually measure a product. How do we actually measure whether you've got it? So the first rule that's used a lot is what we call the 40% rule. At least 40% of surveyed customers must indicate that they're very disappointed if they no longer have access to your product or services. Okay, 40% of surveyed customers would actually be very disappointed, or at least 40% of the customers consider your product or service a must-have. So in other words, they're not saying, if something better comes along, I'm out. They consider you part of the schedule, part of their budget, and they consider you a must-have. So surveying your customers is extremely important regularly, and they must consider you something that's really important. 4 other metrics that they use, this is mainly for tech companies, but something that can actually be adopted even for a physical one, is visitors to your business. There's a low bounce rate. In other words, when people come in to check around, are they leaving and never coming back? A visitor's expectations are being met because they found what they're looking for and they want to stick around. Shorter sales cycles. So customers that want your product don't need much convincing. So if your sales cycle is getting longer and longer, you may not have product market fit. But if it's getting shorter and shorter, you tend to. That's what that means, that people are recommending you out there. High time spent interacting with your product or your sales desk, and also many touch points. In other words, they're asking more and more questions. They're trying to find out more and more things. Do you do this? What about this? What about that? This means that your customer is having a satisfactory experience, and they want to see if you can meet other needs of theirs as well. And they're also looking around. They're more curious. High returning people as well. People come back, reflecting a lasting impact. So people go and they come back. Without you having to reel them in, they're actually coming back to your business to do more business with you. In fact, when they come either to the marketplace or whatever it is, they're actually looking for you and coming to you to ask you questions. Well, something is causing them to come back, and that means you made a really good impression on their heart. Customer lifetime value. Customer lifetime value also means that how profitable a customer is. And remember, we talked about this last time with customer acquisition costs and customer lifetime value. So it's very important to measure the behavior of the people who are interacting with your business, whether they're buying or not. It tells you whether you've got a product that's actually fitting the market. Other metrics for product market fit, there's quantitative ones: net promoter scores, customer retention rates, growth rates, paying customer renewal rates, market share, and whether the growth for your demand is the demand for your market in your market is outstripping how fast you're growing as a company. That shows you've got a product that's actually fitting the market. Other things you can check out, which are less quantifiable, are word of mouth. Are you getting covered in press? And also, are customers using it in an explosive and destructive way? In other words, are customers using it in a way that you cannot manage? Like, they keep changing the method. They're hacking your product and they're just figuring out new ways to use it. And it's almost confusing you that they're now starting to innovate with your product. That means you've got a product that fits the market. So these are metrics that we should be looking at to measure. And like I said, before we start looking at major profitability, getting loans, before you get a loan, these are things you should know before you bring in an outside investor. Like, this is something you should establish first before you even bring in an outside investor. Measuring, PMF measuring as well. In other words, we're looking at how to measure and test it. So here's some of the questions you want to ask. Does some segment indicate that they will switch to your product? So survey people, show them a sample of your solution, a prototype, and they'll be like, hey, I'll use that. Is there some segment that says that? And segment, I mean, is there an actual profile of the kind of people, not just one person? Is there an actual segment of a specific kind of people who would do that? Are some users who have rejected similar products willing to try yours? Do people group your product accurately with the right competitors? Do users demonstrate an understanding of your product's differentiation and unique proposition? In other words, when you go, you've marketed that you are different from the competitors in XYZ. Do customers actually say that you are different from the competitors XYZ or not? So in other words, have they gotten your value proposition? And do you have an underlying metric such as retention rates that measures you up against your competitors? You want to try and grab this information as well. Now, 4 common mistakes that we make when trying to figure out whether we've built a product that fits the market is that we prioritize well-known customers over desperate ones. This is an interesting one. I always say, I've actually said this before, and I've said, start with customers who are underserved. We like going for the big customers. So I've seen this like in the manufacturing space. Somebody makes a new dishwashing liquid. And the first customer they want to go for are the major big box grocery stores. They're going straight out there to market to the big box grocery stores. And as a result, they end up incurring a lot of costs at the beginning. Big box grocery stores demand 21 to 30 days worth of credit. And they demand huge order amounts, and they don't pay you on time sometimes. In fact, a lot of the times they don't pay you on time. Okay, so that's where the problems come. So big box grocers have actually been the demise of many people in the manufacturing sector, because instead, now the successful ones I've actually worked with, because we actually had a project that we were doing before in one of my different lives, where we're actually working on trying to see what are the launch strategies in the manufacturing sector. Successful ones actually go through Kantembas first. The only problem, I think, as a country is we've never created a composite network of Kantembas in this country so that there's a platform for them to be able to order goods in this country. I'm going to keep that to myself because that's something for the future. But the point I'm trying to say is that we've never actually worked on this. So an integrated network is one of the reasons why a lot of the manufacturers go straight to the same network, and they don't actually have they don't actually have the proper kickoff point. So they start with a customer whose needs and requirements are too expensive for them to fulfill, and they're not able to. So start with the customers who need you the most, not customers who are the most prolific. So that is one of the things. So start with the lesser known, smaller fish rather than the big fish. So there was an actual method to this madness that was explained a while back regarding this. Another commonly made mistake when trying to establish whether you've built a product that fits the market is iterating on what instead of who. So in other words, we're so stuck on the customer is the one we want, and therefore we'll just keep changing the product until this person agrees to it. Treat a failed product market fit as a call to change the product is dangerous. Rather experiment with different groups, because you may find different user groups actually might say, hey, that exact product you just made, that's actually what I need. Okay, so switch it. You never know. It just might be a different user group. When Fanta first came out, obviously, this is a folklore story, but when Fanta first came out, it was called Fantasy. That's where it gets its name in Germany. It was tasted so bad it couldn't fit the customer drinks demographic. But what ended up happening is people used to use it for cooking. They used it for cooking gravy, and it was so profitable and productive during that time, during World War II, that it was successful as a cooking gravy. So your product sometimes you may find a different group that is useful for it. Most of these Silicon Valley products, be it Instagram, wherever, they were trying to do something else, and then they just picked up very quickly. YouTube was meant to be a dating site. Then it ended up being an actual, video sharing site, because people were supposed to share video forms of their dating profiles, and then they picked up very quickly that people are just sharing their videos, and bang, YouTube was born. So you've got to figure out that sometimes the exact product you have, you're just marketing it to the wrong people, or you're just trying to date the wrong customer. Pursuing growth before value. Artificially trying to grow your business by getting loans or stimulus and all sorts of things, or marketing yourself before you've determined whether your customer actually is getting valuable, is the biggest mistake you can make in scaling your business. Okay, so before you grow it, are you valuable to them in a way that they return to you regularly? Okay, slowing down on innovation. Product market fit is a process. It's not a one-time discovery. So as markets, customers, and competitors shift, so do their needs. Needs of people evolve over a period of time. So that's something you may want to keep an eye on, and focusing on company building rather than problem solving. I think this is the biggest one. There is a constant focus on company building rather than problem solving. That's a bonus one. There's an excitement over the prospects of building a product, building a company, that which is misconstrued as success. And what ends up happening is that you forget that at the core of any business is a problem that needs to be solved by a product. Remember, a business is nothing but a problem solved with a product, built with a process, delivered by people. So we get to the whole processes and people, but we forget at the core, the product must solve the problem in a bigger, better, faster, stronger, simpler way. That is delivering value. Okay, so we're going to be talking next week about product market fit versus problem. We're going to be talking about how to now establish it. What's the method? So these are some thoughts on product market fit that we got to. Now it's also about how to do it, where we'll be going through looking at product market fit versus problem solution fit, the 6S model, creating a new market. We'll be talking about bridging the idea from bridge from profit to idea, rapid prototyping, and then eventually in the following week, we are going to get to user testing and going through the problem. We're going to go through user testing, and we're finally going to get to the UX testing as well. So there is still a bit more to go inside this journey. If you have liked it, smash that like button. Give us your comment at the end. Did you pick up anything of value today about building a product that fits your market? Do you have a clearer understanding that the first step that any investor, lender, anyone is looking for, before anyone lends you money, They truly want to see what is the probability you're going to pay them back. And that is based on the fact that do you have a way to deliver a product that you can sell to a customer or a group of customers who are growing and now you're paying you at a profitable way? Do you have that? If you do not have that, then it is basically logical that you won't be able to, in the long run, pay back the loan that you're looking for, or give profit to the customer you are hoping to, give profit to the investor you are hoping to take in. Do you have something that fits what the market is looking for is the question. Okay, so first things first, I wish you all a wonderful day. See you tomorrow as we now break down the budget. And that's when I'm going to break down the actual budget. We've been analyzing it all week as we break down the budget. Wishing you all a wonderful day. God bless. Stephanie, we'll catch you some other time.